Small caps, sustainable companies, and value stocks will be the big winners in 2013, says my next guest, Natalie Trunow of Calvert Investment Management. I'm going to find out what's so special about these three groups. Welcome, Natalie, and tell me, why value over growth when the economy is supposed to be growing?
Right. Well, value stocks have underperformed significantly over the past several quarters, partially because of the underperformance within the financials group. But that trend started to reverse in the fourth quarter of 2012, and we believe that that trend will continue into 2013 and potentially beyond.
Is there a sector, a group of stocks you like best from the value names?
I did mention financials. There's been a lot of restructuring in the sector, and it's taking back some of the leadership in the both large and the small cap, especially the regional banks. We're seeing significant improvements in the sales growth as well as the earnings growth within the group.
And you like small caps. Now, small caps are supposed to lead out of a recession. Hopefully, we're pretty far from the end of the recession. So why small caps now?
Right. That's another trend that we feel could reverse, and actually we have seen reversing somewhat again in the fourth quarter of 2012. What we've seen in the early recovery is investors still very much focused on the risk aversion trade and reaching out for yield, reaching out for safer names within the mega caps that were yielding nice dividends, and away from small cap that was perceived to be a little too risky. We all know about the tremendous flows into fixed income assets and safer assets. So the risk aversion trade drove that discrepancy between the performance in performance between the two asset classes, and we believe that's reversing and is likely to continue to reverse in 2013 and into the next year.
Now, environmental and social stocks had a rough 2012. A lot of the alternative energy names got sold off. You think they're due for a comeback this year? Tell me why.
Incorporating ESG factors and considerations into the investment process is becoming more and more important from many perspectives. We feel that the risk of not incorporating that information is too great, and the opportunities that can be missed are also pretty sizable. So we feel that because of the new information age and the speed with which information is disseminated, and also the interest that consumer now exhibits in terms of environmental issues and health issues, really does translate into both positive and negative impacts on companies' bottom line. So investors are starting to pay more attention, ever more than they have before.
So you can make money by doing good. I like it. Thank you, Natalie Trunow.
Thanks very much.
I like it when you come here as well.
Great.
Thank you, and thank you for watching The Street.